Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, October the 15th. The year's 2025. Let's talk trading. Result or process? These videos are for educational purposes only. Your results may differ from mine. As always, have risk management in place so you never lose more than you are willing to lose. Now, result or process? I realized something about trading, and it's not that it's something I haven't realized before, but I kind of see it slightly differently. Most of the times in life, you focus on the result. You could be baking a cake and there's a process. You follow the process and you get the result. You build a house. You want to build a house. You put together the plans and you follow the plans, you build the house. And then when you're done, you get the house. So once again, it's the end result. It's the house. You go work for a company, you do your job, and it's like, they don't want excuses, they want solutions, they want results. And so the focus is totally on the result. But in trading, the result isn't guaranteed. When you bake a cake and follow the recipe, you got a really high probability that that cake's going to turn out okay. Unless there's something wrong with your equipment or your ingredients, chances are that cake's going to taste pretty good. But in trading, you can focus on the process, which is what you have to focus on, but the results aren't guaranteed. And that's one of the things that I think trips up traders. Because what happens is that when you are working with the system, a method, and all of a sudden you don't get the wins that you were hoping for or expecting, you want to start messing with that process, that indicator, that system. Usually you want to add to it. And I only laugh because we've all, taken that path, and it just doesn't work. Because we fail to acknowledge the nature of the market. And that's our downfall. If you stick with the method and you stick with it long enough, chances are it's going to produce results. I like the kid with this about the squigglies, right? Well, it's kind of simple here. You got the M5 EMA5 and the M1 EMA5. And it's kind of simple. If you're coming off a relative bottom and price closes above the EMA, either the 5 or the 1, you take it, and then you just ride it. You can see here, just recently we had a close below the EMA 5. Okay, and then what happened? It closed above it, and then price continued to the upside. Now you might say, but wasn't it at a relative high right here when you look back? Well, kind of, sort of, maybe. But the thing is, if you look at, what was price doing? Price has been going up. And so you see here, price has been going down, and all of a sudden you get a turn trade right here. Actually, there's a turn here and another price turn here off that low. And then it closed above the M5 EMA5 right here. And it happened to be in the launch pad. And it came back down, but you can see here it's putting in higher lows. It's making what? Higher highs. And you see it closed again above it right here. Maybe you jump back in, but then it closed below it, but it wasn't really near a relative high. So then it closed above it. You jump back in, and then it closed below it again, closed above it. You jump back in. I mean, it's simple. You follow the method. Is it going to work every time? No. I mean, here you could say, here's a turn trade. I jump in and only good for a couple of pips. And if you didn't get out, you almost were down maybe 10 or 12 pips. Did you hit your stop loss? Maybe, maybe not. Or maybe you cut it off here when it actually closed below it. So you got above it. It's not doing what I wanted to do. So I'll just scratch that trade. It just depends on your money management, your risk management, and your entry exit strategy. But the thing is, see, once you enter the trade, all you can then do is look and see what the market does. Where does the market take you? It's not like you're in a boat and if the wind's pushing against you, you can turn the engines on and go the way you want to go. It doesn't work that way in the market. Once you get in the trade, then it's just simply deciding when you should get out. And it's like you don't really focus on that result because you want the positive result, but you stick with the process. What's the process telling you to do? And the funny thing is that you can test this in real time. I mean, you could do a dime a pip. That shouldn't hurt you, because if a dime a pip hurts you, you probably really shouldn't be trading in the first place. So you can just look and play this out. And so right now, let's see, are we making highs for the day? Yeah, we're making new highs for the day. What do we got here on the range for the day? We're at 82%. We're at 82 pips, 43 percentile. Let's see, where did this bar open? 3403. So probably wants to retrace that return bar, because that's definitely a return bar. You see, you had a big return bar here, it retraced, and another big one here, it retraced, another big one here. See, a couple big return bars here, they retraced. You see these patterns because we tell ourselves a story. We give things names and we build a story around it. But you see, that's just how we're interpreting the market. It has nothing to do with what's really happening. It's just our interpretation of what's happening. Price is just going up and down. Buyers are buying and sellers are selling. Traders are trading. That's just it. But we get involved in these elaborate stories, and we start to believe our own press releases, and we wind up in trouble. Where I was listening to another Charlie Munger speech or video, and it's funny, and he keeps repeating certain things. It's one, don't be stupid, don't do stupid things. That's the big one. Two, he says you have to have patience. He says, and that's pretty much it. I mean, you can, a simple, simple, simple strategy with the proper money management, risk management can pay off. I mean, you don't have to try and outsmart the market. He says it's better to avoid the stupid than try to chase, the smart, the intelligent. And so, the whole point is that in trading, you really do have to focus entirely on the process, because it'd be really hard to um, come up with a system that is a consistent loser. I mean, it'd be really difficult. Even though I like to say about my inflection points and all, you'd really have to work at it, because if you have your risk and money management in place, you're going to get your share of winners. You got to be in the game to win. And, here's a nice move here from 65 to 95. And, and it basically, it gave you an opportunity here. Price closed below, but everything has been pointing up, and you just jump in. And you could say that's hindsight if you want. But the thing is, it repeats itself. And so now you can possibly wait for the opportunity to go short. Let's see. Because you're in the rat zone. All your biases are long at the moment, though. So you just have to wait. Because see right here, this is an area where um you can either exit and be happy, or you could wait for the signal that says, nope, it's time for me to exit. So, for example, if you've been riding this trade here, and then you get this signal here to exit, that's okay. Because then you got the signal to get back in, got the signal to exit, got the signal to get back in. And you might say, well, why isn't this a signal to go short? Once again, you could take it, but, price had been steadily moving up. And, these colored backgrounds are the M30 candles. And so you can see here, you know, they like to cover the previous M30. So you can see here, it was trying to here, only got about halfway and reversed. But you can see here, there was a nice cover, and it kept going. So, once again, we make up these stories about covering candles, even though that's statistics. But we tell ourselves these stories. But the thing is, you have to come in with the method or process, and you just follow it. And with the proper money management, it should pay off. And so right here, you can see it looks like it wants to possibly go the other way. And it might. We don't know. That's trading. But, our this little simple system here, it's like, no, it's above the EMA 5. Not going to take a short until it actually cracks it. So, fellow traders, this just goes once again to show you that it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over and out.